Is Jane Street the reason why Bitcoin isn't at 150K right now? There have been massive developments on the Jane Street and Bitcoin price manipulation front. Guess who taught scam, bankster, fraud how to trade? None other than Jane Street CEO Rob Granieri. And we also now know the secret trading technique that they used to run the 10 a.m. Bitcoin manipulation algo that had been pummeling Bitcoin for months. This is becoming a massive story with massive implications because, as we talked about yesterday, who is the major market maker for BlackRock's Bitcoin ETF? That's right, it's Jane Street, and it's no surprise that ETFs are now under major scrutiny. The rehypothecators are getting annihilated, and it's insanely bullish for Bitcoin. That's right, look at the chart. Read 'em and weep. We are back, baby! And Saylor isn't selling. He's in the not selling the Bitcoin business, and he says the business is about to be a booming. And he isn't alone. Financial giant TD Cowen just said the fundamentals of Bitcoin have never been stronger. $2.5 trillion Citi just made a major Bitcoin announcement. And Morgan Stanley, yeah, those they just announced plans to offer Bitcoin trading, lending, yield, and custody in the future. Yeah, I guess you could say things are getting pretty serious. So serious that according to Cathie Wood, $1.5 million Bitcoin is on the table. That's right, we got a hell of a show today for William Wallace.
Now, there's a third place you can get credit. And the third place is you go to a crypto exchange or an OTC exchange, and they'll oftentimes give you a loan at 4% or 3% or 5% or 2%. I've had people offer me Bitcoin-backed credit at 1% or 0%. What's the catch, Natalie?
Right. That's the question.
There's always the catch is they want me to transfer the Bitcoin to them so they can rehypothecate it.
Right.
So if you have $10 million, you either cannot get a loan from a legitimate bank, or you can get a small loan at a 10% interest rate, or you can get a 3 or 4% loan, but then it gets rehypothecated. So your $10 million of Bitcoin gets sold once, gets sold twice, gets sold 3 times. You might actually create $30 or $40 million worth of selling because the Bitcoin that you posted that you transferred to the shadow bank or the crypto exchange rehypothecated it 3 times. Okay, so what's holding down the price? I think what holds down the price of the asset is the lack of a fully formed non-rehypothecating credit system, right? And there's a limit to how much you can rehypothecate certain other assets. Right? When you post your home as collateral for a mortgage, the bank doesn't turn around and sell the house on your street 10 times. If they did, the price of houses on your street would be lower, right? Mm-hmm. So I think that the lack of a fully formed banking system holds the price back. The existence of rehypothecation in the crypto economy damps the vol. It works to both sides, right? When people want to get short, they might get short 50x leverage. When they want to get long, they might get long 50x leverage. So right now we're in that bear market where you've got the rehypothecation holding back the price. And I think at some point it reverses itself. We'll just have to wait.
Well, the tides are a-changing, and we know their game now. This is what Jane Street was doing. The same thing, same playbook that got them temporarily banned in India and other countries. They actually made over $4 billion swindling from people in India. Well, here's how they did it. Have billions of dollars from investors. Buy spot Bitcoin at, say, 68K. Open massive shorts via options or derivatives. Sell large amounts of Bitcoin in minutes with algos, combined with low liquidity or negative news to trigger panic selling. Price crashes to 62K. Close shorts for massive profits while losing just 5% on spot. Buy spot Bitcoin again at 62K. Squeeze the shorts and create FOMO to push price higher. Open massive shorts again, rinse and repeat. So, is Jane Street the reason we're not at least at 150K right now? According to Jeff Park, not exactly. This isn't about one villain firm like Jane Street. It's about how the Bitcoin ETF machine actually works. Authorized participants, the big Wall Street desks, they can short ETF shares and hedge however they want. And here's the key. If they hedge with futures instead of buying spot Bitcoin, the spot never gets bought. So the natural ARB mechanism that should push the price up, it doesn't fully fire. It's not illegal. Not necessarily evidence of some secret cabal meeting, but it's structural and could say structural by design. Park's bottom line is simple. No authorized participant is explicitly suppressing Bitcoin, but the ETF structure can dampen price discovery. It may not be that Jane Street is holding us back from 150K. It might be that the plumbing itself slows the explosion. Paper Bitcoin will always return to its intrinsic value of zero, and that is why ETFs are under scrutiny. And if you watch yesterday's episode, we break down the interesting timeline with Jane Street and the creation of the biggest ETF in history. Pretty insane, but according to Saylor, we are sitting at the same inflection point as the iPhone, and we have evidence to back that up. But first, Michael Saylor.
On 3, people start to think, and myself included, I didn't think the original iPhone 1 or 2 were that useful. There was no app store, there was no cut and paste, they were kind of toys. Around 2009, the iPhone starts working, it's iPhone 3. By 2012, they're around the iPhone 4, iPhone 5. Everybody agrees it's a cool product. Apple stock peaks. Then it crashes. Between late 2012 and May 2013, Apple stock falls 45%. The same 45% Bitcoins fall. The Apple P/E goes to 10. The Ford P/E less than 10. It's being valued like a tired cash cow, utility company. Like no technology, no future. People are down on it. You know how long it takes, Natalie, before Apple recovers to a P/E of 30 from 2013?
Years?
7 years.
7 years.
In 2020, Apple returns to a P/E of 30. So it's 13-year cycle from 2007 to 2020. The greatest company of its era, at many times the most valuable company, the most successful product, the product that 1 billion people agree is something they can't live without, maybe the most successful product in the history of the human race, takes 13 years peak to trough to peak, 7 years to recover. And you know what it took for people to give Apple the P/E of 30 again? The endorsement of Carl Icahn and Warren Buffett.
Wow.
2 people who probably didn't even use the iPhone that much, if at all. You never would have read a review from Carl Icahn or Warren Buffett on the iPhone, did you? Like, are they at the top of your technology, advocate list or technology reviewer list? So that's an example of how conventional markets evaluate innovation. And here's the irony, right? At the point that I give that speech, I'm saying, hey, this is an iPhone 5. There's not a 6-year-old that doesn't want this iPhone 5. At the point I give the speech, there's general consensus that the iPhone is something you can't live without and no one's got a product nearly as good. And yet the conventional market's counter-trading it. Okay, so if you got rich in the past decade, you probably bought big tech. You probably bought Apple. You probably bought Google. You probably bought Meta. Maybe you bought Amazon. Maybe you bought NVIDIA. Maybe you bought Tesla. There's no way you got rich without buying big tech. Big tech has been the primary screaming success the stocks are up 10x, 20x, 30x, 50x.
You know who's showing us evidence of an inflection point in adoption? None other than Morgan Stanley. That's right, Morgan Stanley. They want a seat at the table. After years of rolling their eyes at Bitcoiners, after calling it a fad, a bubble, magic internet money, now all of a sudden, it's a strategic allocation. They laughed at it, they ignored it, they missed it, and now they want to wrap it up, slap a custody fee on it, and pretend they believed all along.
So let's talk about some of the products that are coming up from Morgan Stanley. You'd mentioned you're going to allow folks on the E-Trade platform to buy and sell crypto, spot crypto, which is great. And I think you're doing that through a partnership. And then I think later on, at some point in time in the next year, you're actually going to build out a native custody and exchange solution, which I'm pretty excited about. You'll potentially be the first major bank to offer that. Why is that piece important? And what are you thinking about? Like, how does that strategically fit in?
Yeah, I think it's a natural, we really need to build this out internally. We can't just primarily rent the technology to do this. People expect Morgan Stanley, they trust our brand to be no fail. And when you sit in that position, you have a significant responsibility to your clients to make sure that you're delivering that in any level of technology. So I think that's one of the things that we want to do. It's a totally different environment to know that you are custodying your assets. You have legal custody with Morgan Stanley, and Morgan Stanley is overseeing those assets for you. There's always those that are going to want to self-custody. That's a natural part of this space, especially in the Bitcoin space. I think for some of you in the room that may not know my background, prior to being in the digital asset strategy space, I ran our emerging market investing business for the last 13 years, and I've been at the firm for 26. So my entire background in emerging markets, as you can imagine, the adoption of Bitcoin and cryptocurrency. I mean, I think we lead 17 of the top 20 markets of adoption around the world. This has been a very, very long journey for me, being on the ground with many of these companies and investors and users of cryptocurrencies early on. So, you know, one of the things that we really want to do is just make sure as this continues to mainstream and institutionalize that we're being able to provide those services to clients.
Well, that's pretty exciting. So you're going to offer the ability to custody and buy and sell crypto and Bitcoin specifically, and probably some other coins. Do you think you'll offer yield and lending services against that Bitcoin?
Absolutely, that's part of the discussion and the exploration. It's a natural part of the roadmap to continue to explore. I think we're in very early journey on that, just in terms of the number of products that are out in the market. I think we've seen even this year, little bit surprised at how much momentum there is around DeFi lending. That's definitely a topic that we've seen pop up again and again. We see headlines around that in this year, but a little bit of a different product than what you have with Stretch.
Yeah, and so awesome. So crypto custody, exchange, yield, lending, which by the way I think is going to be world changing when you do that. So $8 trillion in assets on platform. I assume part of this is a commercial decision because people have crypto assets off platform.
Yes.
Do you have a sense of how much that might be?
It's a considerable number.
Yeah, so it's a lot
of current clients.
Right, and so you would then get that onto your platform.
So you can So you can either bring that in through
And not to mention Citi also hopping on board with a corny mission to quote make Bitcoin bankable. Whatever the hell that means, but let's check it out.
So yes, as we move into the world of 24/7 assets like Bitcoin, we definitely need 24/7 US dollar or 24/7 digital money. And all our systems and processes are also being uplifted into 24/7 support. Like we absolutely need that. So in some sense, we are back to the world of Citi never sleeps. So this is the one big idea, to make Bitcoin bankable. Later this year, Citi will be launching our infrastructure that integrates Bitcoin into traditional finance. So we're going to start with core custody and safekeeping capabilities, institutional grade key management and wallet infrastructure. So what does it actually mean to make Bitcoin bankable? Three things. First, as we said, institutional grade custody and key management infrastructure. We also will be bringing Bitcoin into the fold of the $30 trillion of traditional assets that our clients entrust with us today. So it'll be the same framework that's applied and now brought to Bitcoin. We will be offering our clients a single service model across crypto, securities, and money. What this would mean is we will be feeding the Bitcoin positions through the same reporting channels and frameworks and tax workflows that traditional securities fold into. We've heard from our clients, like they don't want to handle wallets and keys and one-time addresses, so we will take care of those problems.
Different strokes for different folks, I guess, but I think everything here is going back to what Saylor was saying at the beginning. And all these banks and institutions, they want your Bitcoin so they can rehypothecate your Bitcoin. They aren't concerned with freedom, only paper gains and paper promises, keeping the Ponzi alive. And at the end of the day, they have to offer and buy Bitcoin because otherwise they'll lose to the people that do. Now, what's the key to surviving these vampires seeking to rehypothecate your Bitcoin? Well, it's simple. You take self-custody. And as Giga Chad just said, you do not sell your coin.
You know, we've gone around the world talking to companies about buying Bitcoin. Well, what I've concluded is that Bitcoin for corporations is stretch. Like if you go to most companies with hundreds of millions of dollars of capital and working capital, it's probably easier for them and better for them to buy stretch than it is to buy Bitcoin. It's very difficult for them to convince the board of directors that they should buy a 40-vol asset that with no cash flows, that they have to mark to market every quarter because it might screw with their P&L. But on the other hand, convincing the board of directors that they should actually collect 2 or 4 times more cash flow and not have volatility, that's easier. It's like, instead of you taking $100 million and buying Bitcoin and getting on the roller coaster, just give me the $100 million. I will accept all the risk. I will accept the roller coaster. I'll over-collateralize it. I will give you the 10 or 11% yield back. I'll solve the tax problem. And I promise not to sell the Bitcoin. And so we're in the business of not selling Bitcoin. We got very good at it. We have a PhD in HODLing, you know? And so I figure, why don't we just HODL for the thousands of companies instead of try to convince everybody else to do what we're doing and convince their shareholders and their board of directors?
Just since Jane Street got sued 2 days ago, Bitcoin is up 10%, adding $120 billion to its market cap, and the Bitcoin weekly candle has turned green after 5 consecutive red candles. And during this whole thing, Saylor wasn't the only one feeling more bullish than ever following the crash. So is Cathie Wood. And she's calling for $1.5 million Bitcoin. We're about to bring it home, but before we do, look at our likes.
3 or 4 times, maybe.
I gotta pump those numbers up. Those are rookie numbers in this racket.
Speaking of holding your own keys, if you're looking to reclaim your sovereignty, you're going to want to visit our friends over at the Bitcoin Way. If you're not running a node, you're not verifying your own transactions. You're relying on someone else. The Bitcoin Way will get your coins off the exchanges into cold storage and guide you step by step in setting up your own node. It's hands-on training from the masters of self-custody. And ask yourself, are they listening to your calls? Tracking every tap? The Bitcoin Way will help you choose a privacy phone, install a privacy operating system, and regain your digital sovereignty. And if you need location insurance, a Plan B residency is within reach. They'll guide you step by step into a Bitcoin-friendly community where sovereign individuals thrive. Visit thebitcoinway.com and book your free 30-minute consultation using that link in the show notes. Today's show is brought to you by Ledn. If you ever need cash but don't want to sell your Bitcoin, Ledn makes that possible. They're the global leader in Bitcoin-backed lending with $10 billion plus in loans issued since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? With custodied loans, your collateral is not lent out to generate yield. There are no credit checks. You can get funds in as little as 6 hours, no monthly payments, and you can repay anytime with zero penalties. Plus, they publish proof of reserves every 6 months verified by a top accounting firm. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at learn.ledn.io/simply. That's learn.ledn.io/simply.
You'll see it's very low, especially since 2019, since more traditional investors have been getting involved with it. The correlation is 0.14, so almost no correlation. But if you zoom out and you look at the longer-term price chart of Bitcoin, what you'll see is gold often leads, and certainly in the last 2 cycles, Bitcoin's performance. So gold is a leading indicator in at least the last 2 cycles. We think the other thing going on is we're seeing a lot of OGs selling. Those who were very early adopters of Bitcoin are selling. Now, why are they selling? Well, according to some of them, Bitcoin has lost the plot. Too much traditional finance or financial players are getting involved. And from our point of view, all along, and this is in our collaboration with Dr. Arthur Laffer, known for the Laffer curve, he has said the more that Bitcoin becomes involved in the traditional financial ecosystem, meaning traditional financial institutions start adopting it, the stronger his conviction will be that it is indeed the new global monetary system I described. So our conviction has actually gone up as Bitcoin has gone down.
One thing is certain, the Bitcoin obituaries keep getting more expensive. Do with that information what you will. If this is the iPhone moment of money, then imagine Saylor walking into Shark Tank today.
Hello, Sharks. I'm looking for 1% of $200 trillion of digital capital backed by digital credit in exchange for 0% of my company, MicroStrategy.
You haven't explained how I make money, which is the most important thing.
Because there's no chance of you making money on this.
First, we had Bitcoin, which is digital capital. Now we have Strategy pioneering digital credit. In the future, we're going to have digital money. We issue shares of our common stock to pay the dividend of our preferred equities. Then we use our different preferred equities to pay for the dividends of their other preferred equities.
Let's leave all the passion and all this kumbaya. Leave it aside for a second. In the end, Shark Tank's about making money.
Isaac Newton would have invented Bitcoin if he could have. In fact, he probably did.
I'm so frustrated. I have no idea. I really don't know what your business is. I don't know what your strategy is. I really don't know anything.
I went to MIT. We sold Nike Dunks and they're trading for like $2 grand on eBay.
Why are you here?
Sure, you could invest in a company like Nvidia or Microsoft or Tesla or Amazon or Apple that's trading at a 20 to 60x price to book, or you can trade our company at a 1.19 MNAV during a Bitcoin bear market.
You're out of here. See you, buddy. Goodbye. Take the broom.
Evan.
Jeffrey Epstein said I was autistic.
To everybody who's watching, don't buy it. I'm out.
And the possibility of World War III is higher than ever, which is probably a good time to visit our new sponsor, Sat123. Because when cell service dies, life doesn't have to. Sat123 hooks you up with real satellite phones, Starlink kits, and rugged off-grid internet that works anywhere. Mountains, ocean, middle of nowhere, it doesn't matter. If you care about preparedness, freedom, and staying connected when it actually counts, go to sat123.com. That's sat123.com, and don't forget to use promo code SIMPLY for 15% off. No signal? No problem. Just in case we couldn't play that skit, we will have a link in the show notes. Saylor reposted it. It's absolutely hilarious. I hope you guys enjoyed this one. Let us know what you think down below. Don't forget to like, subscribe, and give us a pant by sharing the Sound Money Gospel. Set those notifications for the best in Bitcoin news delivered to you daily. We got a lot of great stuff coming your way, so stay tuned, have a great weekend, and I'll catch you all next time. Love you guys.
If you prefer to go down with the ship, you.